Today's daily deal, interest rates. What is happening at the Fed? Well, we're going to start off with number one. The jobs report for October is going to be missing. By missing, that means they're not going to do it. The government shutdown skewed some of the numbers so much so that it's really hard for them to compile that report. And by the time they do, next report's already out. So they're going to be combining the two reports, which means that we won't get that data until mid December or so, well after the Fed is meeting. So, what does that mean for the Fed? Well, without data, it's hard for them to take action. So, the odds of a rate cut from the Fed level have gone down and sunk in dramatic fashion. So, it's very, very unlikely that they'll take action, is what the odds makers, so to speak, are saying. Now, what does that mean for you when it comes to real estate? Well, not a ton because the Fed rate does not directly impact mortgage rates. However, a lot of times, based on what the Fed is projected to do, we will see some rate action happening. Now, previously, we saw rate action happen in advance, and we saw mortgage rates drop, and then the Fed rate would drop, and sometimes you see the mortgage rates tick back up because, well, maybe they hoped for a 50 basis point cut and only got a 25, things of that nature. It's also depending very heavily on exactly what Jerome Powell says about the future, about potential for economic boom, recessions, future rate cuts. All of those things really impact exactly what's going to happen in regards to the mortgage rates. So, what have we seen over the last few days? Well, as a result of the no rate cut, that was somewhat expected, even though the odds went way, way down. Previously, prior to the odds tanking, we were still only at about a 65%, where previously we were near 100%. So we already saw some of the mortgage rates ticking up over the past several weeks. Now we're starting to see the Treasury and bonds all take a slight impact the other way. And we are seeing a little bit, just very, very little easing of rates on the mortgage side. Now, what's more important than that is the third point that I was going to make, which is that mortgage applications have gone up, and they've gone up to levels that we haven't seen since early 2023. So we're talking nearly 3 years, and they're at their highest level. And it's because people are waiting, or people are tired of waiting on the sidelines and want to make a move, and they have needs, right? They've got maybe new kids and they're tight in their homes. So they're making the moves that they need to make for their family. That's today's Daily Deal, and we'll see you soon.